Very good morning, friends. So, I hope you're all doing safe as well as healthy. Well, I've been discussing in the last couple of videos Index 12 that deals with income tax. And if you recall, in the initial videos itself, I had outlined a 5-step model in terms of application of a deferred tax calculation. Just to remind you, in terms of step number 1, we were calculating a carrying amount of the asset. Then in step number 2, we were calculating a tax base. Then in step number 3, we were identifying the temporary difference, whether it's taxable or deductible in nature. And that would lead to a DTL or a DTA as the case may be. Well, typically I would say it was in step number 4 that once you calculate the taxable difference or the deductible difference in step number 3, when you multiply it with a tax rate, then you get a DTL or a DTA. So basically the deferred tax liability or the deferred tax asset is supposed to be the temporary difference, taxable or deductible, multiplied with a tax rate. So my step number 4 is basically focuses upon what is the tax rate to be taken for the measurement of a deferred tax. Well, I guess one thing we all know very apparently, the deferred tax is considered at what we call a substantially enacted tax rate. Now, in this particular video, I'm going to throw a little more light in terms of when you say substantially enacted tax rate, what does that mean? Especially when I'm looking at with reference to Index 10, that is events after the reporting period, then how do you connect the tax rate with reference to Index 10? Let's dig this out in detail in this particular video. 15 जुलाई को सीए फाइनल का रिजल्ट डिक्लेयर हुआ और बच्चों ने बहुत अच्छा परफॉर्म किया, रिजल्ट्स भी एकदम शानदार थे, जिसके अंदर सीए फाइनल ग्रुप 1 और ग्रुप 2 का लगभग 22% रिजल्ट रहा और बोथ ग्रुप्स के अंदर देयर इज बीन अ 12% रिजल्ट. अब वक्त आ गया है उन अनअकैडमी सीए चैंपियंस को रिवॉर्ड देने का. मई 22 के अंदर आपके रैंक्स आए हैं या आपके किसी सब्जेक्ट में अच्छे नंबर आए हैं, उसके बेसिस पर आप रिवॉर्ड्स ले सकते हैं. यू कैन गेट अप टू 10 टाइम्स योर सब्सक्रिप्शन फीस बैक. इसके लिए आपको एक गूगल फॉर्म फिल करना है. डिस्क्रिप्शन बॉक्स के अंदर आपको ये गूगल फॉर्म मिलेगा. ये ऑफर उन बच्चों के लिए है जिन्होंने अनअकैडमी पर अपनी क्लासेस अटेंड की, आइकॉनिक और इसके अंदर प्लस लर्नर्स ने. आइए ज़रा आपको थोड़ा सा इस रिवॉर्ड प्रोग्राम के बारे में थोड़ी सी इनपुट्स दें. अगर आपकी सीए फाइनल में 22 के अंदर टॉप 3 रैंक्स आई हैं तो यू गेट 10 टाइम्स दी सब्सक्रिप्शन फीस रिफंड. अगर आपकी रैंक नंबर 4 to 10 आई है तो यू गेट 5 टाइम्स द सब्सक्रिप्शन फीस रिफंड. और अगर आपकी रैंक 11 to 50 आई है तो इसके अंदर आपको मिलेगा 3 टाइम्स द सब्सक्रिप्शन रिफंड. लेकिन इसके लिए आपको एक गूगल फॉर्म इसके अंदर भरना है जिसके बेसिस पर आप ये रिवॉर्ड प्रोग्राम अवेल कर सकते हैं फॉर ऑल दी आइकॉनिक एंड फॉर दी प्लस लर्नर्स. साथ में सीए चैंपियंस वो भी हैं जिन्होंने किसी एक पर्टिकुलर सब्जेक्ट के अंदर अच्छा स्कोर किया हो. जैसे कि अगर आपने किसी भी पर्टिकुलर सब्जेक्ट में मोर देन 90% मार्क्स लिए हैं तो आपको गिफ्ट वाउचर मिलेगा 5000 का. अगर आपके मार्क्स 80% प्लस हैं तो आपको गिफ्ट वाउचर मिलेगा 3000 का. और अगर आपके 60% प्लस मार्क्स हैं तो आपको गिफ्ट वाउचर मिलेगा 1000 का. इसके लिए आपको ये गूगल फॉर्म का लिंक भरना है और आप अपने रिवॉर्ड्स क्लेम कर सकते हैं. तो भाई किस बात का इंतजार कर रहे हैं, गूगल फॉर्म भरिए अगर आप इस एलिजिबिलिटी क्राइटेरिया के अंदर आते हैं एंड लेट्स क्रैक इट. You can see a very interesting chart, which is summarizing the aspect of the tax rate to be considered with reference to Index 10. Now, as I just made a mention that when you're considering a tax rate for the measurement of a deferred tax asset or a liability, we are supposed to consider what we call a substantially enacted tax rate. Now, when I say a substantially enacted tax rate, it is quite possible that, let's say, sitting on the balance sheet date, the tax rate has already been finalized for the next year. That means, let's say, for example, the financial year is 21-22. Now, it is possible that by 31st March 22, the Finance Bill came before 31st March 22 and it became a Finance Act before 31st March 22. Then, of course, I will consider the tax rate which has been enacted in the Finance Act. But there could be certain other permutation combinations which could arise. And then the question arises, what is going to be the substantial enacted tax rate? Now, if you look at the first combination, let's say the Finance Bill was introduced before the balance sheet date. And that means what? That there has been a condition which is present on the balance sheet date. And let's say it became a Finance Act also before the approval of the financial statements. That means after the balance sheet date, but before the approval of financial statements, that means the Ind AS 10 cutoff period. Now, since the Finance Bill was introduced on before the balance sheet date and it became an act post balance sheet date, so we can say the condition was present and we get evidence, and therefore it becomes indirectly, you can say, an adjusting event. So do we consider the tax rate which is the new tax rate for the purpose of measurement of a deferred tax? And if you have taken the tax rate which was prevailing on 31st March, do we update this deferred tax on the basis of the new tax rate? The answer is yes. And do we need to make any disclosures as per Ind AS 10? Well, not as far as the non-adjusting events are concerned. Well, in this particular case, you could do the disclosures of adjusting events, but I put a no because I don't need to make disclosures for a non-adjusting event because this indirectly becomes adjusting in nature. I think fairly simple and straight. Now let's imagine another combination that let's say the Finance Bill was introduced after the balance sheet date and it became a Finance Act before the approval of the financial statements. Now in this particular case, there was no condition on the balance sheet date. And you can say the evidence arises post balance sheet date. Now this is a clear-cut case of a non-adjusting event. And if it is a case of a non-adjusting event, I am not going to make any changes to deferred tax. I'm not going to update my DTA or a DTL on account of a new tax rate, but a disclosure might be required if the impact is material in nature. So I think if you look at the first two combinations, fairly simple. The first one is a condition on the balance sheet date, the Finance Bill was there, and then it became an act post balance sheet date in the Ind AS 10 cutoff period. So we need an adjustments, updation of the deferred tax is required. But in a situation where the bill was introduced after the balance sheet date and it became an act also post balance sheet date, it's a non-adjusting event. So the impact of the new tax rate will not be taken, but disclosures are certainly required because if it is something material, then non-adjusting events would require disclosure. Now there is another very interesting situation, and that is the Finance Bill is introduced before the balance sheet date. The condition is present on the balance sheet date. And it is yet to become a Finance Act. That means even before the approval of the financial statements, it did not become a Finance Act. Then what do we do? Apparently, you would say it's non-adjusting and I should not take into account the new tax rate. But I would say it all depends upon the accounting policy of the company. In this particular case, you need to see the status of the Finance Act. Maybe the Finance Bill is awaiting only the approval of the President, which means considering that it awaits only the approval of the President, it is more or less substantially enacted because the word is very clear. It doesn't say enacted. It says it is substantially enacted. So in this particular case, the company would choose an accounting policy and make a decision whether they want to make an updation of the deferred tax or not. But in any case, the disclosures under Ind AS 10 for a non-adjusting events would not require. So in this particular case, you'll have to make a disclosure regarding the accounting policy of the company. So the interesting portion now is that there are three situations. Number one, bill before the balance sheet date became an act in the Ind AS 10 cutoff period. Go for the new rate. If it was a bill before the balance sheet date and it became an act, did not become an act even up to the approval, then an accounting policy choice. You need to decide whether you want to update or not. And if it is a bill which is introduced post balance sheet date and the act also became post balance sheet date, then I think it's simply non-adjusting, but you need to give a disclosure about the new tax rate, which even the Ind AS 10 would require. So this is as far as one of the aspects of step number 4 is concerned. When you measure a deferred tax, what is the rate to be utilized? I hope you enjoyed the video and a lot of insights came into account. Do put in your comments on the chat box. And thank you for watching. Bye bye and take care.